Hello, everyone. I have my business blazer on, so it's time to talk business. Today, I wanted to do just a quick rundown of what the balance sheet, profit and loss, and cash flow statements really are and how they work together. So, to start off with, we have the balance sheet, which is probably one of the more misunderstood reports. Let's take a look at the different sections of our balance sheet. So this report gives you a look at your assets. We've got your bank accounts, any items of value that your business owns. We also have your liabilities, or what your business owes, like bills and accounts payable, debts and leases. And then down at the bottom, we have your equity section, which is essentially what's really yours after paying what you owe. And in addition to showing you what you have, what you owe, and what's left over in equity, the balance sheet really shows you the liquidity of your business, and it can show you how your business has grown. So it's a very valuable report, and knowing how to read it can really provide you with a lot of financial insights. But taken alone, it doesn't give you the full picture. So next is the profit and loss. And this is probably the most common report that business owners rely on. But as we'll get into in a second, it can be deceiving without considering the transactions posted to the accounts that we just considered on the balance sheet and are not reflected on the profit and loss. But for now, let's just take a look at this report. So we've got a really simple report, actually, which is why we all love it. So this shows you your income and your expenses. And so this helps you to see if you're profitable or if you need to make any adjustments to become profitable. However, a lot of business owners see this net income at the bottom of their profit and loss, but they don't see the cash in their bank accounts. So, what's the deal with that? Well, that's where our third report, the cash flow, comes in. So, the cash flow is a summary that shows all areas of cash flow, all money in and all money out. And the total of your cash flow at the bottom, cash at the end of the period, should match um, your total cash balance at the end of the reporting period. So let's see if it does. So this report shows $4,063.52. So let's go back to our balance sheet where it showed our bank accounts, and let's take a look. So we see the cash in our bank accounts is sitting at $2,001, but is that all the cash that we have right now on hand? Well, we also have our undeposited funds, or money that we've received that we haven't deposited, or recorded deposits in QuickBooks. So if we take those two amounts, those undeposited funds and total cash in our bank accounts, we end up with that amount, $4,063.52. So, while profit and loss shows you income and expenses, it doesn't show you the movement of items like loan payments and asset purchases, which can be why you don't see the income that your profit and loss shows. So in summary, quick summary, a balance sheet is a snapshot of what the business has and owes. The profit and loss shows if the business is earning or losing money, and the cash flow tells you if there's enough cash available right now. So using all three of these reports and the information they provide together can give you a complete financial picture of where your business stands right now. So thanks for watching. I hope that was helpful, and now you can get to business.